Everyone to the Section 12J webinar on a student accommodation. Chris Hart will be presenting it. So Chris, the floor is all yours. Thank you.
All right, thank you. We've got to... Right, good morning.
You can see your screen,
thank you
Chris.
very much indeed. Have you got, can you see my screen?
Yes, just activate the slideshow, please.
All right, we will do so now. No, something has gone wrong. Share.
Yes, slideshow. From beginning, there we go.
Good morning, everybody, and thank you very much. We appreciate everybody's attendance, and I hope you find that this is informative. I've titled my presentation, Prospering Through Taxes, which is strange, because how can we prosper through taxes? It's usually something that's taken away from us, but Section 12J actually allows us to recover these taxes and invest it in a potentially lucrative investment. I'll start with what I call as our disclaimer, because what I want to emphasize is that Impact Empowerment Ventures is a financial services provider regulated by the FSCA and also SARS. And the disclaimer really is to show that, or to inform all attendees that this presentation is not investment advice, it's investment information, and that to act on any information that comes out of here, one still needs to have advice. And what I want to actually reflect is in the presentation is firstly, Section 12J, what is it? And then I want to reflect what Impact Empowerment Venture does and its relevance in the Zeerust project that we're presenting, which I will also present there. And then we want to see how can we actually access the Section 12J investment through a structured way, and we'll take it from there. But the first thing, what is Section 12J? Section 12J is really a deduction that you get by making an investment. So the example I've got here is an investor invests R1 million into Section 12J venture capital company, which in this case is an Impact Empowerment Ventures venture capital share certificate that you can present to SARS and get a refund for your taxes. So it works very, very similarly to a retirement annuity. When you do a retirement annuity, what happens is that you make your contributions. When you submit that to SARS, it is a deduction of your income, and you get some tax back as a consequence of that investment. So it's very similar to that. The minimum investment is R1 million. The maximum investment is R1 million for individuals and trusts, and the company maximum is R5 million. So if one invests R5 million, it's the taxes against the R5 million of income that then gets transferred into as a subsidy towards your investment. So if we take an example of somebody investing R1 million, let's say they get 400,000 Rand in tax, it could be anything between 300 and 450,000 Rand on that R1 million income, depending on where your tax bracket is. But let's assume it's 400,000. What happens? You make R1 million investment. Your income is then, if it was R1 million, your income is R1 million minus the R1 million in investment that you made in the venture capital company. That means for taxation purposes, your income was zero for the year, and the tax that you've paid against your income then comes back to you. So if it's 400,000, your R1 million investment has effectively cost you 600,000, with the balance really being paid by SARS. Remember, if you don't do this investment, that 400,000 stays with SARS. You don't see it again. Right, you have to be invested for 5 years, and after 5 years, you pay capital gains tax on the exit, but if you stick with it for 5 years, your the tax that you save on this is a permanent transfer of that tax back to you. And that's Section 12J, what I call through the front door, the straightforward vanilla 12J. Where does that, put Impact Empowerment Ventures? Is that Impact Empowerment Ventures is an impact investor. And if we have a look at where we want to actually aim and generate the impact of the investment, we want to generally focus at the bottom of what I call as a social hierarchy of needs pyramid, or society hierarchy of needs. When we look at impact investing in general, you'll find a lot of it focuses on the actual top end, right? If you go to Europe in particular, it's green energy, that type of thing, arts and culture, which in Africa is not that relevant, right? So what's relevant in Africa is food, jobs, housing, and then also education, but also important is that business ownership. In other words, we promote the ownership of SMEs, and that's an important aspect of impact investing, right? Impact investing is gaining popularity. I think anybody appreciates if you put your money on the stock market and you buy, pick a share, let's say you buy a nice blue chip company, let's say like Steinhoff, you buy it, the share goes up, hopefully, and you make a profit, but it's not clear what impact your investment had, all right? How did it benefit the community? And impact investing is trying to actually demonstrate that your investment is making a change or improving society in some way, whether it's in the way that we are actually speaking of. So that is the importance of impact investing, and this is the focus of Impact Empowerment Ventures. We live this out in this particular acronym called ENRICH, right, which stands for Enhanced Risk Control Returns. In other words, this is an investment. It's not a charity. Impact investing is investing. So we want to generate good returns that are risk controlled. In other words, it's not taking wild bets or anything like that. So enhanced risk control returns that creates investment for change and hope, because we're actually making an impact in society. And you'll see our bottom byline, enriching lives through opportunity, is exactly that. We want to try and generate economic opportunities, and in that way, lives are enriched as a consequence. So let's have a look at our investment approach. We start with commercial merit. It's got to be the departure point of our investment evaluation process. And next to commercial merit are the people that are promoting the actual business or project. Do they have the capability and the capacity, and what that's so important. Good people can make even a mediocre project work, but the best projects in the world can be run by the people involved. So it's very important that the people are evaluated properly. And then next to that, above people, is also the risks associated with the business. All right, we don't try and run away from risk. We embrace risk. We want to understand it. I think you can appreciate you take a risk by doing something, and you take a risk by doing nothing. Each one has its risk, and it needs to be evaluated properly, scoped, and then managed and mitigated. In other words, you use risk as part of a fact of life, and you use it to try and enhance the prospect of commercial success. And then finally, technology, an important dimension to how we actually evaluate investments where it's applicable. We're in the fourth industrial revolution. The technology that's available and becoming available and that's being developed is phenomenal. And the nice thing about that, the fourth industrial revolution is changing business models to a point that it's enabling small, medium enterprises to compete with large enterprises for the first time in several decades, where we're shifting away from the mass production which is economies of scale, large amounts of capital, to mass customization, which is much more focused, and small businesses are far more in tune to actually generate that changed business model that mass customization brings to us. So of this particular project, what are the investment merits of the actual project? The Zeerust, what is interesting with a project in a really fairly remote town, which is in a village near that remote town, is that it's neglected. It's an open field, and here we have a TVET college that's fairly significant in size, where 80% of the students actually live off campus, right? And the market size here is still quite big. In other words, we've got at least 5,000. Of the 5,000 students, there's 4,000 students that are living off campus, and the market size, I think, is even higher in the longer term, because the TVET college that we're speaking about here is in fact underutilized at the moment, and that underutilization is to a large extent constrained by accommodation. In other words, students don't come to the college because if they come, where do they stay? And so they go to places that are better endowed. And so if we can start spurring in or catalyzing investment in a place like this, it actually enables the college to expand its enrollment and its capability and capacity, and its course content and variety can also be expanded at the same time. And this is then a unique feature of this village, is that there is tertiary education available in a relatively remote rural setting. All right. And that's why this particular project has a great impact. And because of a variety of factors, the actual returns look very good. And there's reasons. I'll go into the next slide then on that, is that the capital costs are lower, and that makes an enormous difference in terms of the potential of that. For investors, it's a minimum of $1 million, maximum of $2.5 million. If you're using the 12J, if you don't want to use the 12J, we will welcome your investment as well. And that's not limited to those particular amounts either. What is nice about this project is already about 15 million rand committed, that's registered with SARS in terms of nominal amount that's going to come in, and the project is scalable. In other words, we can design a project depending on how much capital that we raise. Minimum time of investment time horizon fits in with a 12J. Minimum is 5 years, but ideal in a kind of project like this is about 10 years for that. The TVET College, this is a satellite view of the actual college. There's a regional hospital next to it. So this is a village that's reasonably well endowed. It's not something that you're going to battle for water and electricity. There are those services available, but there's also plenty of land around the actual TVET college. It's not like one has to build something miles away, and the TVET college is very keen to actually help facilitate the development of the student accommodation. So in terms of investment impact, there's a number of very, very important impacts. The one is in the immediate build phase, you'll create jobs during that time. Those are usually quite temporary, they're construction jobs, but the operating jobs that'll persist after that is there in terms of the services that the facility will need, but it's also creating business ownership, not just the accommodation facility itself, but also businesses that service that that facility will also be able to be generated. In the longer term impact, the capacity of the college will be able to be expanded. It gives investors the proof of concept, which is important because these opportunities, there are hundreds of them scattered around South Africa, where you could say just doesn't get the attention of the big capital that exists in Johannesburg and Cape Town. These areas just simply don't do that, and we are looking, subsequent to this, is to attract development finance institution investment into these rural areas that need it. But from a social point of view, it improves study conditions. When we say 80% of the students live off campus, most of it is in back rooms with very, very limited facilities. And we talk about limited facilities that include water and electricity and certainly connectivity. And these are, what we do is we improve the study conditions and consequently the academic performance of the actual college. In doing so, we're also generating community opportunity, because by creating a successful investment in a place like this, it attracts the attention of other investors. So it helps to improve what I call as a virtuous cycle in the actual community. And from a business point of view, it's giving local SMEs support. It's going to be designed in the way that it helps to circulate money within the community, which is a problem in rural communities like this. They export money all the time, and it doesn't help, with the long-term prosperity. So this is one of the actual impacts that we want to generate that. So just further, merits of this particular project, there are high potential returns. And the reason why is that the capital costs are relatively low, and it be as low as 100,000 a bed. The benchmark in some of the urban areas it sometimes exceeds 200,000 Rand a bed. And that immediately, the whole cost differential here is an important underpin to the actual project's potential viability. There's established alternative building methods that we can use that have already been used, that are bank sanctioned, that we're engaging with. And then when one looks at the running costs, all right, it's not like a project in Bloemfontein or Pretoria or Cape Town. Space is not a premium, and so you've got the ability to actually generate something that is very COVID compliant, and you've got economies of scale. You don't need to worry about the land cost as much as you have to worry about it in the urban centers, and that's one of the reasons why the capital costs are so much lower. And then, of course, from a cash flow point of view, the college is in its face supported, and the facility will be, is being designed and built to FAS accreditation standards. It's supported by the college, which makes a single payer. One doesn't need to worry about going to each student and finding out what's happening to the, what's happened to their money. All right, and so that's important. It's the right time and the right investment, and that I think is quite important. So how does one access this particular facility and investment? And we're going to do it through the taxes. The problem with the Section 12J is you've got to come up with R1 million to invest, and that is immediately a problem, right? And so what we do at Impact Empowerment Ventures is, instead of the investor needing to come up with the money, we lend you the money. right? And that is allowed by SARS. It actually specifically says, SARS says you may take out a loan as long as you're at risk for the loan and you pay it back. That's the two stipulations that they make. So we've got to write a loan that meets those specific requirements. But that loan creates the investment, and that investment means that you can go to SARS and get your taxes back to actually fund the loan. And that those taxes have to, the refund then have to go down to pay down the loan. It's part of the compliance that we've got. We ask the investor to put down a 25,000 Rand securing deposit. And that's so that you are at risk, and that may also be used to pay down the loan, right, if the actual underlying investment is insufficient. But otherwise, it's returned to the investment at the end of the investment period, right? It's written as a no interest rate loan because while it's still in the Impact Empowerment Ventures VCC, right, we're not taking any risk on the loan. And so we write it as a zero interest rate loan because it's also not being utilized either. It's only when it gets passed into the qualifying company, which is the Zeerust student accommodation prospect, that interest starts to become payable. That's when we monetize the loan, fully monetize it. And as a consequence of that, we then ask the qualifying company to actually pay for the loan. The loan is also a limited collateral loan. It's not like a normal bank loan, which is an unlimited collateral loan. We specify the collateral that we require, which is your investment in the actual Section 12J VCC, the 25,000, and then a cession of your taxes and the dividends that come from the actual qualifying investment. And that's where it's limited. So if everything collapses in a heap, we can only go after those specified bits of collateral. So what we're doing is effectively we're taking the asset and the securing deposit as collateral. The loan account, assuming 400,000 Rand is returned in, from SARS, turns the 1 million Rand loan into 600,000 loan, as I say, and that's secured by the collateral. And we believe at Impact that is sufficient collateral to cover the actual loan. Then we pass that on to the qualifying investment, and in the qualifying investment, the qualifying investment, which in this case is student accommodation, I think they assume responsibility for the loan. They pay the interest, they service the debt, etc., while it's in there. And that's an important thing, is that in doing so, we actually shift the risk away from the investor. In the same time, we're actually trying to generate a return for the investment. And in student accommodation, the benchmark is generally about 10%. So if we get 400,000 Rand in cash, we're trying at a minimum to deliver 600,000 back to the investor after year 5. All right, in other words, 10% compounded annual growth. It does look like this project has a higher potential than that, and that is why this is such an attractive investment. So if I go back to the whole model, it's really fairly straightforward, but it looks more complicated than what it is. The investor gets a loan to actually generate the investment. The investment generates the tax return, which then goes to help pay down the loan. Everything is transferred to a qualifying company. The qualifying company has the tax refund available to it, and then it also has the rest of it available to it through a refinancing of that. So it really is, from the investor's point of view, as we've effectively limited the downside to 25,000 Rand. In other words, the securing deposit is the downside. How do we actually access this investment? Well, basically what we want you to do is there's a commitment to invest form that we will send you subsequent to this investment. And with the commitment to invest form, there's certain FICA documents, like, for instance, IB, proof of tax, proof of residence, proof of bank. Those 4 documents also have to accompany the commitment to invest. We get the securing deposit in place, all right? And if you can't do all of it, do some of it before 30th, because the big problem here is the 30th of June is the end of 12J. And so we need to prove your investment occurred before 30th of June. So we just need to get that securing deposit in place as the proof. And then subsequent to that, we complete the required documentation. Who can invest? Companies, trusts, individuals, provisional taxpayers, partnerships. And partnerships are interesting because if you don't have R1 million worth of income, let's say you've got 600,000 Rand of income, you can partner with somebody, let's say, earning 500,000 income. Your joint incomes are over R1 million. As a partnership, you would then qualify for the investment. Thank you very much from my side. We appreciate there's a strong team that's there to back this, the administration of this. And I will leave you with this, the contact details on how to actually access this investment. There's the email, there's the phone, there's the website, and basically to take the actions of accessing this investment. It's a very lucrative opportunity. And I thank you very much.
Thank you, Chris, for that. That was a wonderful presentation. And like Chris said, we will be emailing out this recording to everyone that attended. So, and please, I did put down the website, so feel free to contact us in any way you'd like to. Unfortunately, we do not have time for Q&A. So if you have any queries, please can you email us and so forth. You can contact us on a lot of social media platforms that we have. So thank you, everyone, for attending. Chris, any last remarks?
No, thank you very much. We do appreciate it, and we encourage people to ask questions and contact us, and we are available for that. Thank you very much.
Thank you, everyone.